Hello everyone, this is Juan Sarmiento and today is Friday, July the 21st. So far, in this particular system or approach to trading, we have made $10,000 or close to that out of our initial $100,000. So that's a 10%. But keep in mind that we started this back some time ago, and I'm gonna show that to you now. Orders, see working orders and trade history here, and then go down, scroll down until we see 428. 428, that's in April the 28th. So we have May, June, and July, 3 months to make 10%. Okay, so that's pretty good, isn't it? So the system is a good one for sure, but we were able to pick good trades. And I think the reason was that I picked the options with the most extrinsic value, and those tend to be those that are at all-time lows or a pretty good low, and then they eventually bounce back up. And that is a good way to make money, is buying a stock that is beaten down. Okay, let's start with the IRA account, and I'm going to go checking all the trades we have, and all we have to do now is see which ones are expired, because today is an expiration day, and so we need to look for those who have a call that expires today. Okay, so that's not one of them, and neither is that one, and this one is. Okay, so we're going to roll it over. To what should I roll it over? Well, let's say to 28, between 28 and 30 days from now. Okay, so we need to first look at an option that will give me $500 or more. And so here we have August 11th, that's 21 days. Okay, August the 18th, and I'm going to scroll down. You see that this options here, that's 95, have some intrinsic value. We want the one with no intrinsic, only extrinsic value. So I'm going to be selling this call. So click on that bid, and assuming that we don't have anything else, I'm just looking at the option we're selling, and that's going to give me the extrinsic value, which is 6.9, and that's $690. Okay, so that's more than $500. That looks great. Okay, what about further out? Let's say to the next one up, August 25th. Again, scroll down until you see the color changing on the background right there. And in this case, we have $7.25. So click on the bid, and of course, that will be $725 in pure extrinsic value right there. And so we could make $725 in this trade. Okay, so how would I choose? Well, you can see that the option I'm picking are at a hunter strike price versus my current $90. So let's see if I do the rollover, say analyze rolling, and I'm buying back that option that expires today, but I'm selling the one that is expiring on the 18th, and I need to change the strike price to 100, and then we can see what is it that we will be getting. Well, imagine the current trade. This is it. You can see that the green light is flat. There's no pink line. That's because pretty much this, you have only $3 left because it expires today. Right there, see that? Okay, so I'm gonna do this one here, and then I say to expiration, and then this yellow line says 12.50. Okay, so without the rollover, we made almost $500. With the rollover, we have the potential to make 12.53. So that's very good. All right. And what if we did the other trade? And we're going to change that to the 25. That's a bit out, so you are actually giving up a week. Okay, so yeah, unlock it and then look at it again. Okay, this will be 1283 versus 1248. Okay, a minimal difference. So I would rather do the one with the closest expiration, which is the 18. Okay, and this is what it would look like. Okay, so without it, we already made the maximum of almost $500. With it, we would make an additional 700 and something to reach 1250 if the stock closes at about 100 or more. But it really doesn't matter. What counts to me is the option that I'm selling giving me 500 or more. Well, it's giving me 700. So yeah, that looks great. Okay, so I'm gonna trade this one here. Now, you would know that I have two accounts. One is the IRA and the other is a margin account. With a margin account, you can buy, you can buy stock half of the price. Look at this, the margin account, which started with $500, so is now $58,000. We started with $50,000 and now $58,000. So, which means that we have made, you say 9 times 2, 18%. So you would say, well, obviously, if you do the margin, you have a better return on investment. But with that comes a larger risk. So make sure you ask your broker about the implications of a margin account in this kind of trading. Okay. All right. In the meantime, let's just enter this trade for both accounts. So I create duplicate order, confirm and send, and I'm going to say multiple accounts, and I'm going to sell for both accounts. Send that off. And then we wait until it gets filled. In the meantime, let's proceed. KSS. Let's go to the margin account or the IRA account, just one of them. You see August 11th. No, too soon. It's too soon for that. Okay, Moss. Now that one is worth rolling over because it expires. It's expiring today. So let's add simulated trades, and again we're going to find an option that is worth selling. So make sure you just look for that option that has zero intrinsic value and the maximum extrinsic value for that. And I just say bid. Okay, and I will do the August 25, and so we do the same thing. Just click on the bid and let's see what we get. Go to the analyze and the risk profile, and then in this case we're going to do 3 because we have 3 calls already and the stock price is 38, so we're going to sell 3. Okay, so what if we did the 40 expiring in August? How much are we going to get? Well, imagine that we're just selling the option. That's 393. That's not much. Remember, we want we want $500 in extrinsic value. So let's try the August 25th. Okay, this is more than 500. Okay, so we're gonna do the 25. Let's get rid of that one. And here we're gonna say analyze rolling. And we're gonna buy back the July 21st and sell the August 23rd. And look at the extrinsic value is 34. And the reason we weren't getting much on the 25th is, is you see that 39 here? You need to change that, 39. Excellent. Okay, so We can delete this one here. And say what is the maximum profit we're going to have in this case. Well, 12.50. With in the current trade we already make 489, so doing this gives us 12.15, so that's $754 more. Okay, sounds great. So now we do the same trade for those both accounts. Multiple. And then I will adjust the price so it gets filled. We don't care about a few cents. We care that the trade gets filled. Okay? So the rest, we can go quickly through them, but I'm pretty sure there's nothing there. Look at the MU, that's August 11th. Roku is August the 4th. SPWR, this is August the 4th. WDC is August 11th, and X is August the 4th. So we would just wait until the next round of expirations before we can do anything. In the meantime, adjust the trades. And you can see that I have the debit on this ATZY is, well, we need to adjust that obviously, and here too. So cancel, replace, unlock, and send. Just to make sure that all gets filled. Cancel, replace. Unlock and send. Make sure you do that for both accounts. And repeat this until they get filled. Perhaps you want to wait 5 minutes before you do. It might get filled. Okay, so the purpose here is to collect that amount every month, okay? And then eventually you would do as nicely as we have done, presumably. But you need to be careful not to sell cheap options. You want to sell the options that are expensive so that you can get $500 or more every month. Okay, that's all for today. Thank you very much for joining me, and see you next time. Bye-bye.